Hey there, this is Ryan with Stock Investing and Trading 101. If you haven't already watched my video where I explained how I had one of the worst weeks in the market and I show exactly the mistakes that I made to have this happen, definitely check that out. Today I'm going to be doing an overall portfolio update, mainly showing my Robinhood and Stash portfolios, and I may also briefly show my M1 Finance portfolio. So currently this is my Robinhood portfolio. I have about $7,700 invested. Currently there's quite a few holdings that I have. I have over 100 shares of Ford, which I sell covered calls against. Also, I have 100 shares of AT&T, which just got assigned. So I pretty much sold my shares for $39 each, and I also received premium from covered calls, so I made a nice chunk of profit on my AT&T position. I'm going to be looking for an entry point back into that shortly. I have 9 shares of Realty Income, 29 shares of SH, which is a short fund for the S&P 500, 4 shares of TVIX, 100 shares of ACB, which is part of the reason that my portfolio was down. It dropped over 22% this past week, almost 26% down this past week on ACB, which is a speculative marijuana stock. Also, I had Reut, which is a oil company. It's an oil trust. They used to pay a dividend, and it went down 77% this past week. And I had 100 shares of that, so currently down $90 on that position. I might end up just cutting losses on this one because I just don't know if it's going to come back. With ACB, I have more hope for selling covered calls to lower my average and then sell out eventually at a profit, so I'm not too worried about that yet. Other than that, I am holding 1 share of Coca-Cola, 1 share of Starbucks, 1 share of IBM, and 3 shares of McDonald's. My overall profit and loss is $196, so I'm up about 2.5%, even though this past week I was down over 2%, so I had a rough week. But looking at my next portfolio, which is my Stash portfolio, I'm going to be showing you guys currently up $1,200 on my taxable portfolio. This pretty much made up for a lot of those losses on my Robinhood portfolio because this portfolio has just gone up and up in value, so it's kind of helped set off some of those losses. But my biggest holding on my Stash portfolio currently, I believe, is McDonald's at 9% of this portfolio. So it's a pretty big position of this portfolio. It's taken quite a beating, and I've taken advantage to invest heavily into McDonald's. I also have 6% in Johnson & Johnson, 6% in Altria, 5% of my portfolio in Starbucks, 6% in AbbVie, 4% in IBM, which is also down quite a bit, 4% in Boeing, which I'm selling a small position size in. I'm up currently about 10% on it, so I'm just scaling back just a little bit. 3M, 4%. Then we have some lesser positions like General Mills, Home Depot, Microsoft, Duke Energy, which I've been buying quite a few energy stocks. I've been buying Duke and Con Edison and National Grid. We also have Pfizer, PepsiCo, Caterpillar. There's that Consolidated Edison, that ED electric stock that I was talking about. They have, I believe, a 4 to 5% dividend yield. It's about 3.5, so I think this is the lower yielding stock of the bunch. We also have Kraft Heinz, ExxonMobil, Disney, which has been skyrocketing, Hormel Foods, Coca-Cola, Costco, National Grid. This is the one, I believe. This one's yielding just about 5.5%. We also have Apple, and then these we have smaller positions at just less than 1% of my portfolio. I'm going to quickly scroll through these just so you can kind of see exactly what they are. I have restaurant brands, which I've been buying into as well. It seems like all the fast food places and Starbucks, that whole sector has been going down lately, and I've been buying quite a bit of those. I think I'm about to scale back on my position and just start holding it instead of buying. And then lastly, we have my retirement portfolio, which is pretty much a lot of the same holdings. So I'm going to just briefly go through this, and then I'm also going to try to get my M1 Finance portfolio in there too, because each of these portfolios is up different amounts, and they're each kind of balanced differently so that they can kind of hedge each other out. So we have Johnson & Johnson, pretty much all of the same stocks. All the big heavy hitting positions are still, we have some Caterpillar, Pfizer, National Grid, Costco. Pretty diversified. I'm in a little bit of everything on this portfolio and just collecting dividends from almost all of these companies. So really like it. And on Stash they do a drip for your retirement account, which is a dividend reinvestment plan. So all my dividends get automatically reinvested. Last thing here, we're going to look at my M1 Finance portfolio, which is mainly just one portfolio. This is my dividend growth portfolio. This one is also up significantly. I think I'm up maybe around 12% on it. So let's go to my, this is a retirement account actually. So this portfolio currently has about $3,900 on it, currently up about 14%. And this has a lot of different holdings, because a lot of these holdings I don't have on Stash because they don't, for some reason, have any option to buy it. So looking at my portfolio, one of my biggest holdings and the stock that I've been buying in here the most is Clorox. So it's had a really rough time, down 12%. I think it's a screaming buy, so I've been buying quite a bit of it. We also have Consolidated Edison, McDonald's, Johnson & Johnson, Pfizer. We have some Royal Dutch Shell, Colgate, Palmolive. We have some Hasbro, which I'm thinking about buying as well. British American Tobacco. They have a really nice yield. Kimberly-Clark. We have some Chevron, some Procter & Gamble, some Cedar Fair. This is they own the Carnival pretty much, so it's and they have a really nice dividend yield. We have some BP, Unilever, Air Products and Chemicals, and all of these companies in this portfolio are dividend aristocrats or dividend kings. They have a growing dividend, and this is a dividend growth portfolio. So I'm really more focused on the dividend income than I am for the capital appreciation, but of course the appreciation is nice as well. So Philip Morris, a lot of the same companies. You'll notice that throughout all my portfolios, I have a lot of the same companies because these are companies that I like a lot, and they're just strong companies. So this portfolio is up 14%, and that's about all my portfolios, guys. So all of them are up significantly. The Robinhood one is doing the worst at only about 3% gain, but still gains are gains, and I'm happy with any type of profits. So thanks for watching the video, guys. As always, please like the video and subscribe to the channel if you already haven't, and we'll see you guys soon.